So we're going to talk about AI and Bitcoin mining and the quest for power. And first, though, I'd like to have my friends here introduce themselves, to give a little bit of background, so you understand we're not just quite talking heads.
Matt Brown, Executive Vice President at Data Center Services at Core Scientific. So I've been with Core 3 years. My primary responsibilities, mining operations, HPC operations, data center engineering, and data center construction. Prior to coming to Core, a few years at Equinix and IBX operations and on the engineering side. Then prior to Equinix, 10 years at Hewlett-Packard, and then US Army before that. So my entire career has been around building, designing, and operating mission-critical infrastructure all this time.
Hey, good morning, everyone. Thanks for having us, Russ. Mike Terlizzi, Senior Vice President of Data Center Operations with CoreWeave. Relatively new to the team, super excited to be here. Spent the last 8 years with Digital Realty. Came to Digital by way of their acquisition of a company called Telix, a leading provider of colo and interconnection services. Foundational experience at AT&T and WorldCom before that. As Senior Vice President, Data Center Operations, I'm responsible for the design, build, and day-to-day facility operations for the company.
Thanks, guys. I'm just going to jump right into it. Please describe the current state of data center capacity versus demand.
You want to start with that one?
Sure, I'll start. So CoreWeave currently has 14 data centers, growing to 28 by the end of this year. Largely, our go-to-market has been working with leading data center operators like Core Scientific to secure the space, power, and connectivity we need to run our infrastructure. We have been working on some interesting co-design and co-development opportunities, as well as looking at brownfield and greenfield builds of our own.
Yeah, and I'll pick up on that a little bit and expand from both, a Core's perspective and kind of where we're at today, and kind of more nationally, kind of what we're seeing. Core Scientific, 745 megawatts of operating capacity infrastructure today, with more than a gigawatt of energy, of electrical infrastructure that's in the ground that could be developed for either Bitcoin mining or high-value computing across our entire portfolio. More broadly, what we're seeing kind of in the space is we have an electrical infrastructure that was designed for about a 2.5% annual growth rate, and we're seeing demand right now nationally across all sectors of about 4.5 to 5% annualized growth rate, right? And so what that really translates into is tens and tens and tens of gigawatts of demand that is not accounted for in the current planning projections across all grids, across all regions, across North America. And so what that will mean to data center development and Bitcoin mining development in the future is we're going to operate in a world of more constrained power infrastructure. And so I think what you'll hear a little bit about today is what are some of those emerging strategies that might develop from a Bitcoin mining standpoint, and what does that mean in terms of the challenges around AI growth, AI infrastructure growth for operators like CoreWeave, and I think it's going to be a very interesting discussion.
So, are AI data centers and Bitcoin miners really competing for power?
Well, I'll start. I think I started to answer that question a little bit. So the answer is yes. The real question is that at what level are we competing at? At the grid level, absolutely, because we're competing for kind of gross generation resources. More and more secondary at the transmission level, and then more recently, and I think this is going to be a kind of continuing trend, where we're competing for land in substations as computing demand kind of drives out towards these secondary and tertiary markets across the US, which is traditionally where Bitcoin miners operate in. We usually operate in these rural areas where we have a lot of land, where we can find transmission, where we can find generation. And as the proliferation of AI in particular, and it's not the only form of compute that's likely to do this, but as the proliferation of AI continues, we're going to see competition for those same resources.
Yeah, just to build upon that, we certainly see that level of competition between mining and CoreWeave, who is in AI cloud hyperscaler, but we have our traditional cloud hyperscalers, large data center operators, smaller colo and regional colocation companies, all competing for those same resources.
Okay, how much power is required to satisfy demand right now, guys? Just what are we talking about here?
It's depending on which research report you want to believe, but I'll go with some kind of the Grid Strategies, most recent report. So the projection right now is that, and I'm going to go total demand in terms of the electrical infrastructure. The existing projections are we need 38 gigawatts of peak demand growth between now and 2028, right? And I'll put that a little bit in perspective. What was the last nuclear power plant to commission and come online, which was the Vogtle, Georgia plant? The first phase of that came online earlier this year, late last year, 1.1 gigawatts, took 15 years to build, and $35 billion. So if the Grid Strategies report is anywhere close to being correct, we would need 25 to 30 more of those plants to come online in the next 4 to 5 years just to keep up with the current demand on the grid, which is a really crazy thing to think about. Right?
Yeah, it is. From a site selection standpoint, ideally we would have the ability to land and expand, meaning we would deliver a certain amount of space and power on a campus and then be able to expand on that campus, or at least in close proximity, to 10 times the amount of that power. And obviously observe both cost and operational efficiencies in doing so. That's not to say we aren't super opportunistic in finding spaces that may not afford us that same scalability, but certainly have an ample amount of power for that initial build. When you think about the largest data center operators in the world, may have accumulated 2.5 gigawatts worth of power through development and acquisition over the course of 20 plus years. We could be on that trajectory to achieve that amount of power potentially in 5 years.
All right, this next question is more philosophical. I can't wait to see where these engineers take it. What application generates more value from power, AI or BTC mining?
Be careful, Michael. You are at a crypto conference.
I know, and I'm nowhere near the exit. I'm severely outnumbered. Look, they both, and I was wondering if that was a quantitative or philosophical question. Both generate value, right? There are tons of very compelling high-performance use cases. My company's has to be AI, ML, VFX. I see value kind of as a supply chain from my perspective. We have our space, power, land, and the value that I contribute is being able to deliver mission-critical facilities in a sustainable and efficient way. Delivering the network storage and compute in those data centers, and then really handing it over to the magicians on our engineering team to build our stack. Right? They build our stack, they're delivering value to our customers who are procuring our products and services, and then our customers are in turn delivering value to their end users. That could be economic, that could be social, technical, et cetera.
Yeah, and I want to sort of touch on the previous the ending to the previous question. Then I'll come back to this one, which is, solving the power challenges for this exponential curve we're on in terms of the need for digital infrastructure is like a great opportunity for Bitcoin miners and HPC operators to kind of collaborate. And I think, in the past that there's always just been this sort of this separation between these two entities and really no cross-pollination happening. I think that's probably going to change over the next few years. And to kind of get back to the question of, what has more value, as like it's really a trick question in a way, right? Because there's really two ways to think about this. You can think about sort of the social impact to each technology, whereas Bitcoin mining's taking energy, converting energy into a digital asset that is sort of enabling this sort of seamless transmission of value across the internet, which also happens to be the world's best store of value that the planet's ever seen. And so that is tremendous social empower. And then AI kind of in the same vein is we're in the early stages, but it's already changing the way that we think about technology, the way we interact with technology, and that's only going to continue going forward. So both have these really tremendous social impacts to our lives and to the way we do business. The second part of that question is, well, what is the monetary value? And this is a really quantitative, less philosophical and much more quantitative, and anybody can do the math. It's like at today's hash price, you can sort of calculate, it's like what's the kilowatt hour of hash worth in the open marketplace, and you can think about it that way. Or you can also, and you can do the same thing on the GPU AI side. It's like what's the value of an H100, a kilowatt hour of an H100 GPU? And you can sort of do that math and figure out sort of what the market perceives, the market's perception of value, right?
And when you look at the quantitative method, this is where this goes. It's going to be a pretty easy question. Will the higher value application win the large power deals? And if so, where will the lower value application be forced? Will it be forced offshore? Will it be forced into smaller, more versatile power sites?
Yes. I'll kind of let me sort of, if I can unpack this a little bit. What is likely, and just opinionated approach here, what I believe is likely to happen, I think this is what is likely going to happen anyways. Like, where AI and Bitcoin miners are kind of have, over the last couple years, have been building large monolithic infrastructure sites that have tremendous needs for large capacity power, right? The fact is that large monolithic projects are not well suited for Bitcoin mining. I'm an expert in that, having been at Core the last 3 years and what that looks like. So I think what's going to happen anyways is that Bitcoin mining will become much more distributed. It's going to have to, just by nature of the economics, are going to drive towards cheaper power wherever they can find it. That's likely to be in places that are in jurisdictions that have been traditionally difficult to operate in or difficult to enter for a number of reasons. And at the same time, while that's happening, AI's growth are kind of soaking up really these large tranches of capacity of both land, power, transmission across North America.
Mike, you got to deploy a bunch of H100s, or you got to deploy a Blackwell pod. What kind of power? What are you looking for in a site?
Right. So exactly. So we offer various different products to a wide array of customers. So we all know AI demand is increasing, and access to that capacity is going to need to be ubiquitous. So as such, we can certainly look at large footprints, large power blocks in secondary and tertiary markets. But that's not to say, we'll also have the demand for those kind of tier 1 NFL cities as well, where it may be a little more expensive to operate, but for the specific application requires us to be in those locations as well.
Okay, so loaded question here. Where will this new power come from, and does sufficient distribution infrastructure exist to satisfy all this demand? Kind of two questions in one.
Yeah, and it's sort of a multi-part answer as well. It's in the short term, as the growth of digital infrastructure continues to soak up existing capacity where it exists, I think the near term future is data center operators going to have an alternative power strategy that's going to center around some level of cogeneration, on-site generation, or an alternative fuel source. Like, I think if your power strategy involves depending on generation resources coming online, transmission lines being upgraded for you to continue to grow, it's probably not the right strategy for you, right? And so you're going to have to find alternative technologies, and whether those technologies are fuel cells, linear generators, SMRs, maybe more into the future as the economics around that improve, I think you're going to see a lot more projects going to chase after these alternative power strategies. Right.
Yeah, absolutely. So we work very closely with data center operators as well as the utility to provide a load letter that says, well, this is the amount of power we're going to need by when, and then try to solve for that. It's a tedious process and it takes time, but it does afford us the ability to bring tranches of power, albeit in a phased state. We're seeing very interesting opportunities that are, that have a facility or land proximate to hydroelectric capacity. We're seeing opportunities that are fuel cell powered. We have seen opportunities with on-site cogeneration as well. One of the things we're doing is not necessarily generating power, but I would call it finding power, is converting sites from legacy air-cooled to liquid-cooled and becoming more efficient. So we are being more effective with the use of our power, meaning more of the power is going to compute and less of the power is going to overhead.
I was actually, my next question was, does this demand for power favor renewable generation? But I think you guys touched on the fact that it's not just renewable generation, but it's also all kinds of alternative forms of generation, whether it be fuel cells, finding stranded power, finding stranded infrastructure, those kind of things. Is that where this is going?
Yeah, I think it just so happens that those alternative technologies are also low-emitting technologies, very sort of ESG-friendly type of technologies as well. And I mean, listen, for my standpoint is the greatest abundance of alternative fuel source that we have in the US for on-site generation is natural gas. That's likely to be sort of the bridge solution for alternative generation. And then beyond that, there's all these other exciting technologies that are coming in the market. And again, linear generators, which could be powered by natural gas or hydrogen or some other type of fuel source, or SMRs, I think have a promising future. Right.
Yeah, agreed. So sustainability needs to be top of mind, not only as a steward of the business, but as a morally responsible person. So for us, we really need to focus on how do we optimize our facilities. So yes, getting the power is one thing. Using it responsibly in an energy efficient manner is also our responsibility. Fine tuning our application, right, which can fluctuate greatly in terms of demand with the underlying data infrastructure, is critical to the responsible use of that power.
This is a question from Matt. Can miners power both Bitcoin mining and AI compute, and do they get along?
Yes, maybe sometimes is probably the right answer. It's interesting when you compare the load profiles, particularly with AI training models. I think it's particularly where it gets interesting that the load profiles between Bitcoin mining and AI training loads look complementary to each other. AI training has really a lot of volatility in terms it's spinning down, it's spinning up. It may run for a few hundred hours. It may spin back down depending on the size of the training model, et cetera, relating to that, which creates a lot of grid volatility, right? It also creates a lot of unpredictability from the grid operator who's asking you, what's your forecast going to be? And you're like, I think it's going to be this, right? Whereas Bitcoin mining is incredibly predictable. It's an incredibly stable load, right? It's controllable load resource. So it has some, I think it has some attributes where you could find a way to pair those two things together that would be beneficial to the grid and beneficial to the entities, both entities, to do that. Does that require a significant amount of engineering and coordination and infrastructure planning? Absolutely. I'm not saying it's easy, but I think it's plausible. Yeah.
Getting a little specific here. A few months ago, we turned up 16 megawatts HPC for you guys. So I just want to ask just a couple loaded questions, a couple easy questions. How did that deal come about? And then Mike, specifically to you, how did CoreWeave going about picking CoreSci for that agreement there for those 16 megawatts?
Sure.
I'll talk about the deal, and Russ, you already know the story. And sometimes it's just good to be lucky. We're sitting in Bitcoin Miami, and a buddy of mine. So this is like a lesson in, maintaining friendships and maintaining your network. A buddy of mine texts me who says, "Hey, a couple data centers in Austin are coming online, coming onto the market. Would you be interested?" And they just happen to be the former HP data centers that I designed, built, and ran for years during my time at Hewlett Packard. And I'm thinking about this and like, let me ask somebody. Russ is like 6 feet away from me. I said, "Russ, if you know anybody that needs like 22 megawatts of tier 3 data centers, let me know. I may have a solution for you." Russ texts Brian at CoreWeave, and who was CoreWeave CTO at the time, and he gets a reply back, was just like, "Yes, all of it." And I reply back to my buddy who was an owner's rep on the broker side of the deal, and I told him, "Yes, we would like all of it." And then we were off to the races negotiating the acquisition of that infrastructure and getting CoreWeave kind of onboarded as a client.
Yeah, in short, Core Scientific gets it. You guys had an appreciation and an understanding that a large part of CoreWeave's value proposition is time to market, and the ability to compress the schedule, be creative in design, right? To shortcome some supply chain challenges, and then work with the contractors to get the job done was critical. Additionally, to be able to deliver capacity as it became ready, okay, in different phases, to allow some modicum of concurrent construction, where we can come in right behind, a portion of the data center being turned up and begin the rack and stack, was, it was critical to us being able to hit that date. So it is in every sense, a true strategic partnership.
So a year ago on this stage, I was talking with a bunch of power guys and talked about the fact that Core Scientific was going to engage in the HPC AI business, and we had some ideas about it. Fast forward 11 months, about a month ago, our CEO, who's sitting here, he announced on our earnings call that we had as much as 500 megawatts of rack space that we were considering converting over to HPC. So Matt, this is a question for you. How exactly do you go about determining, what kind of sites that we have in our portfolio, which ones filter to HPC and what filters to BTC? How is that decision process made?
Well, I think for our internal process or filtration process really started with what is the economics of Bitcoin mining first. We evaluate the economics. We make some assumptions about what we think the future of Bitcoin mining is at for the longevity and viability for Bitcoin mining is at that site. And then we back into the infrastructure questions. Well, does this infrastructure lend itself to other forms of high value computing? Whether it's AI or hyperscale cloud or whatever it may be, we look at all the possibilities, and then there's a little bit of test fitting that goes on from an engineering standpoint. Because if the answer is yes to that question, we believe that the site is suitable, then we want to evaluate the economics for that alternative form of computing. In this case, being high performance computing specific to AI, and then we want to do some engineering. We want to understand the megawatt yield. What would the power look like? What are the general conditions of the site? Can we build it? Can we design it? Can we build it? Can we deliver it in a time that gives us an advantage into the marketplace? And once we've hit all those check boxes, then now we have an allocation in our portfolio of like what do we feel is suitable for high performance computing, and what do we think long term where we want to be from a Bitcoin mining perspective. Right.
Thank you. So Mike, yesterday on this stage, we were talking about hash price and specifically for a Bitcoin miner, the price of power, the cost of power is incredibly important to us. So I want to ask you, from an AI HPC perspective, where do you guys fall on price of power? Because you're going into NFL markets looking for sites and all that. Where in the checkbox of things, where's the cost of power fall in the HPC world and the AI world?
Yeah, it's a major component, major consideration for us. As I mentioned, We exploit the opportunities for lower cost regions for us to deliver our compute, but there are markets that we need to be in. The other major contributor is we need to understand what rebates and incentives that can be passed on to us and or our customers in those markets. The cost per kW for the infrastructure that we're purchasing, and or cost per acre per land that we're purchasing. We really need to look at the total cost of ownership relative to the products and services we're going to offer in that market.
So, Matt, a similar question to that is, because again, in the world of BTC mining, we think about curtailment all the time. Economic curtailment with the price of BTC, but also sometimes forced curtailment on the grid. How are we looking at, how are you looking at curtailments in the world of HPC hosting?
Yeah, I'd be really interested in sort of Michael's perspective on this as well. But I can sort of share sort of my perspective on it and kind of how we're trying to approach it. Obviously, in the Bitcoin world, we do a lot of curtailment. We're an amazing control load resource in Texas, in all of our service areas, but in particular in Texas, where we do the most amount of curtailment. The way we look at it from an HPC perspective is slightly different. And so the way we're trying to address that is through renegotiating, power rates with our different utilities that may have less of a curtailment requirement related to it, so we can offer more stable power and high uptime. The second piece may be renegotiating PPAs, and then the third piece, I think there is an opportunity, particularly on the training side, where it's likely that we're going to have some sort of curtailment strategy long term, just to help smooth over volatility in the grid as a whole. I think Bitcoin miners are really advanced kind of in this area. Other aspects of the digital infrastructure and traditional data center operators have a lot of catching up to do in this regard. So,
a follow-on question that you and I were speaking about earlier. Mike, do you think, or what are you guys looking at as far as specialized infrastructure when it comes to AI and processing versus, say, legacy? You've already mentioned that you're going in and taking air-cooled and converting it to water-cooled because it's a whole lot more efficient and it makes a lot more, you're able to use more energy more efficiently. What are some of the things you guys are looking at for kind of long-term on that processing and infrastructure for processing?
Sure. When we're how we think about delivering our data centers, our basis of design is to deliver enterprise-class data center, concurrently maintainable, highly efficient, with some application-specific deviations that could be considered. What I found amazing coming from out of the data center operator world and into, we call it the end user AI business, is the amount of collaboration that's going on in coming up with what that next generation design looks like. We've had meetings where we have our team is in there, our data center operator teams are in there, engineering teams are in there. The people who are going to run the facilities, have a say in the maintainability of those facilities. The integrators who are building the servers, our chip manufacturers are all in the same room, just working together to come up with what the right solution is. So that level of, I'd say, collaboration, it's amazing. Rising tide raises all ships in that concern, and I think it's a great benefit. And opportunities like this, to have these conversations and to interact with the people here, contribute to that as well.
It sounds like exactly how CoreSci got started on building our sites, because they didn't exist. So you had to bring in the users, the engineers, the contractors, the builders. Everyone had to work together to figure out what the solution is for very specific problems. On that vein, so Matt, we just talked about this. Do you think there's going to be any sites where HPC hosting and Bitcoin mining happen at the same place?
I think it is incredibly unlikely, but not. It's plausible, but I think it's incredibly unlikely. There's just the infrastructure requirements between the two are just dramatically different, really dramatically different. From our standpoint, the way that we sort of approach data center design and infrastructure is to start with sort of the application layer first, the user layer and application layer first, And then we think about the components of that application layer, the application infrastructure in particular. It's like, what does the control plane look like? What does the data plane look like? What does the storage fabric look like? How do we match up our data center design to complement the architecture, the underlying application architecture, so that we're just not building like a one-size-fits-all solution, that we're really tailoring it specifically to the underlying workload, like we do with Bitcoin mining. Bitcoin mining is the same way. We don't fit Bitcoin mining into a traditional tier 3 data center because it's not economically viable to do so. So therefore, you want a purpose design for that specific type of computing. AI is the same way, whether it's training, inferencing, and it matters kind of what the underlying use case is and how the software and application infrastructure is architected for that use case. And I can say the same thing with a content provider, with a CDN provider, with somebody that's streaming video, with a seismic computing cluster. Like they would all need application-specific infrastructure that's highly optimized and tuned for that use case. And so we've taken the same approach with our first deal with CoreWeave around that.
So this is for Mike or Matt. Do you anticipate any other BTC miners looking at converting their sites to HPC? Is this going to be a trend? Is this something that's going to happen?
My take on it is that you're going to see a number of different interesting collaborations happen over the next few years in this space. You may not see wholesale conversions of sites everywhere, but you might see sell leasebacks of certain assets within a site. Where a Bitcoin miner might own the power generation or a substation. So you might see deals get done that look more like powered land type deals. You might see some conversions, and you might see where we see today, where some Bitcoin mining operators are buying GPUs and trying to retrofit their facilities for. So you're going to see a lot of really interesting approaches, right? Some are going to win and some are not. And so we'll wait and see how that turns out.
Yeah, I think it's a very site-specific opportunity. But the fact of the matter is, the operators of those facilities, they share common experiences, they share common skill sets, so those collaborations work. And I'd say there's a lot of lessons learned from Bitcoin and the power that you guys have operated at scale that can be applied to AI as we continue to grow into that scale.
Yeah. So, and you might not know this, Brian, your other team at CoreWeave know this. So from 2019 to 2022, CoreWeave was actually a client of ours. We host a lot of GPUs. But CoreSite, actually, we had an AI stack. We had a bunch of NVIDIA DGXs. We tried to sell a software stack. We ended up having to sell it to AMD. We lost. You guys won. The other guys beat us. We were not very good at it. We are good at infrastructure, though, and so I want to actually, before we get into Q&A, I want to thank you guys because I think it's a good partnership. You guys have an incredible software stack. Our competitive advantage is in infrastructure. It's not in that software stack. It's not in only GPUs and selling them. But you guys you've got a first mover advantage. So I do want to ask you, who do you guys consider your competitors out there?
I personally don't consider any other player a competitor. I think, and I'm the data center infrastructure guy, but when I hear the more experienced team discuss this, it seems we're several years ahead of where anybody else is right now. So I'm just proud to be kind of the tip of the spear in trying to get us additional space to deploy that stack. But from a competitive standpoint, I'll leave that to the marketing sales folks.
It's been incredible to watch you guys grow. It really has been. So I now want to take, we have a few minutes. I want to turn it over to Q&A from the audience. My friend over here has a mic for you guys, so if you don't mind, just use the mic and hold it up to your face. We'll take this first one and this second one here, but get the mic right up on your mouth like this, otherwise we can't hear you.
Can you hear me? All right, Mike Colanese, H.C. Wainwright, Bitcoin mining analyst. Appreciate this great conversation this morning, guys. My question is centered around existing power generation and capacity online. Matt, you mentioned soaking that available supply up would be the near-term focus for the Bitcoin mining space. But if you could just talk about how those conversations are going to add incremental megawatts online across the various states you operate in. Obviously, you guys are spread across the country. Versus maybe some newer entrants in the space. Just curious, the lead times, getting incremental megawatts online across the footprint.
Yeah, it's a great question. I think this is something where we have this huge advantage. Number one, not only do we have the infrastructure that's in the ground, but we also have the contracted power to go along with it, which is really the key. It is possible for you to find substations out there and land, but you may not be able to find the contracted capacity. You may not get the entitlement from the grid provider, the utility provider, to energize that substation. So, from that standpoint, some of what we see in terms of what are some of the long poles in the tent, if you will. You're waiting for load studies from these utility providers. Even if you find land and power in a building, an asset that you think is viable for either use case, whether it's Bitcoin mining or high performance computing, it's no guarantees that you're going to get the allocation. In fact, we have heard of situations where there was maybe the initial allocation, but the transmission operator allocated that capacity to somebody else upstream, which impacted your entitlement. And so now there's having to go back, do another load study, which takes another 6 months, or maybe 7 months or 9 months. And so these things don't happen very quickly. And as more demand for these resources, for transmission capacity, for generation capacity come online, those, I think the analysis and the load studies are going to take longer and longer and longer as they try to rationalize all this demand. Then on the infrastructure side, which leads you to chase after, it's like, okay, you almost have to so think about this in the reverse order. Where do you have the transmission capacity? Like, where do you have the electrons that I can use? That's likely to be in a place where, like, there's no infrastructure, and which means you have to go build that infrastructure. You have to build a substation, and find transformers, get the interconnect agreements in place, and so you're talking about a multi-year process. If you started today, maybe 3 years from now, you can get a substation online with your full allocation of megawatts, and then you're able to energize it. And then you got to break ground on a facility that's going to take you 6 to 9 or 12 months to build. And so you're 4 years into this project before you can generate the first dollar out of it. And that is the situation we're in right now. So.
Thanks, Matt. The second question right back here at the back.
Hey, Kenzo from Morphway in Paraguay here. I just had a question about what advice you guys have to startups that are operating in difficult to operate environments, as you guys kind of touched on.
I'm sorry, I didn't get the whole question.
Oh, you know how you were talking about difficult to operate environments in
Yes.
earlier? So we're a startup in Paraguay, and I was wondering what advice you had for folks like us.
You're Bitcoin mining in Paraguay.
Yeah, and doing a little AI acceleration.
Yeah.
Start small. That way you make
yeah.
mistakes small.
Okay, cool.
We built 1,600 megawatts of infrastructure, turned on 1,200 megawatts of PPAs, and we had about 800 megawatts of powered shells right now. We've only done some of that in the public eye, but we've been doing this for a long time. You're going to make a lot of mistakes. You're going to burn up a lot of stuff. I was talking to our CTO about it the other day, how many times we've seen a S9 on fire and still mining with it. You're going to make mistakes, so make the mistakes small. Learn from them before you start iterating. Don't copy a bad virus. Make sure you copy a good virus. That's my thought, anyway.
No, I think that's actually great advice. I think it's great advice just in approaches to Bitcoin mining in general, right? From an infrastructure standpoint, from an operation standpoint, yes, start small, fail fast, learn what you can, optimize as quickly as you can, so that gives you the ability to scale, like the way that you want to. And then on the infrastructure side, plan your infrastructure, your capacity expansions in bite-sized chunks. Don't try to eat an elephant all at once. The elephant takes too long, right, to digest. And the economics of Bitcoin mining change so quickly, you want to be able to change with it. So figure out what your like incremental, what your scaling increments are going to look like. Make them as modular and as standardized as you can, and then scale that out, you know, on whatever time horizon that makes sense for your business. But yeah.
Next question, we have one in the back.
Hi. Sorry.
Hello.
On the note of leasing out infrastructure for mining, I was wondering, is there like an industry marketplace, or do you mainly find out about opportunities like that through just your network?
I'm going to let Russ take that one.
Do you mean places to find power to plug in mining, or?
Like, I think you mentioned that sometimes companies will have infrastructure existing already, and they may want to wholesale it or lease out parts of it for other companies to use.
Oh, so I see what you're saying. Okay, so her question is there a marketplace if you have some infrastructure, if you have something you maybe want to even lease out to a CoreWeave or bring online to a CoreWeave, is there a marketplace for that? I don't necessarily know there's a marketplace for that, but there's definitely demand. I mean, there's enormous demand. One of their co-founders, Brian, I was just teasing him about it because at the NVIDIA conference, Brian literally said on stage, if you have 5 megawatts, just come and see me. Now, he was swamped with people, but there is a lot of demand out there, but if these guys haven't made it clear, it's not just about having the power as far as the AI piece goes. If you're going to just have some power, you're going to really need to come in and find a software GPU stack partner that knows what they're doing, and you, quite frankly, the difference in infrastructure from BTC mining versus HPC, they're very different. They're the same at the substation, they're the same at the transformer, they're the same at the medium voltage switchgear, and they stop right there. Everything from that medium voltage switchgear down is very, very different. So, and I would also say the power economics are different. If you're at a site where you have to curtail a lot, you're not going to, that's better for mining. So one of the things right now that's unique for Core, the HPC thing that just kind of happened, all that demand has given CoreSci, which has been doing Bitcoin mining for a very long time. And we were the largest Bitcoin miner by production in 21, 22, 23, the first quarter of this year. It actually goes back further than that. And we learned a lot during that process, and it's actually given us an opportunity to evaluate our whole site and say, okay, if we had to do it again, what would Bitcoin mining look like? And Matt touched on this, he actually said it. Bitcoin mining really does better distributed. It is a distributed network, so you don't need to have a huge site. Bitcoin mining can go in a very small site in Paraguay, beside a hydro dam, in a forest. All it needs is a little bit of internet to connect to it. You can't put Blackwell pod GPUs that cost billions of dollars when you build a pod in the Amazon rainforest and connect the kind of the fiber connectivity. So between the two, there's a lot of differences, and you just have to really evaluate your site to see which one the economics work better. But it's also going to be it's a lot of power and fiber questions you have to go there. So maybe we have room for one more question. Right here.
Hey guys, great conversation. I think I want to ask you guys about this. Overall, I think AI definitely is booming. But maybe you already know, like I heard from the news, the state of Georgia just leave the ban for tax incentive, right? Certain states are not that pro data center, AI, BTC mining included. I want to know you guys' strategies, stay this type of resilient, how you guys become a really good community type of a player to deal with this type of potential HJ risks.
Mike, that's you.
Yeah, so as we go through our site selection process, we have had the opportunity to meet with local utilities, local government officials, and candidly, we're getting a lot of a different response than that. Potentially AI in generally, but the interest in CoreWeave has been high. It is part of their marketing campaigns for the utility, for the land, for the state themselves. And we're happy to participate in that. They're building programs around incentivizing us to actually construct in those states. So I think it's a matter of education, and and us continuing to drive value for our customers and for the marketplace.
Thanks, Mike. I want to go ahead and just thank Matt and Mike for coming up here with us today. And I want to thank the audience for having us. We really appreciate it. We'll be around. Core-size booths right over there, and I think our friend Mike will be there for a few minutes too. So if you have any more questions, please come see us. But thank you so much.
Thank you, guys.
Thank you.